I'm one of those people who have been saying the 4-year cycle is dead for
Okay, let's
a
go.
couple of years. So I said that, last year, and I said that, unlikely to be October, and then it was October of 2025 where it peaked, even though it was a disappointing peak. I said that the cycle before as well. I said Bitcoin is a macro asset now. It should trade only on
Mm.
kind of macro wins, things like, global monetary supply, liquidity, what the economic sectors are doing, manufacturing, things like that. It should trade like an asset like stocks or bonds or currencies. And then here we are, and it looks like it's going to do almost exactly the same thing again, right? So it's pretty funny and pretty humbling for sure. So where are we? I will say, I think we're in an awesome spot. Like, this is just a great area to be accumulating, and it has been. This is the point where, Bitcoin has civil wars, where people, say they're here for the technology, not the price action, where the true builders are actually building things, where the OGs are just quietly stacking sats while everybody's panicking, and wondering if they should, move on to tech stocks and those kind of things. So, in fact, just before I came on, I was reminding myself of where we are, and looking at the 200-week moving average, which I think is just a fantastic way to get based in every cycle. And what we're doing right now, the 200-week moving average is usually the point where Bitcoin either bottoms or it's in the region of the bottom. And if you can buy at or near the 200-week moving average, generally 1, 2, and 3 years later, you're doing really well. In fact, I had something that I posted a while back that showed that if you can catch basically the last time it touches the 200-week moving average or buy around that price, in years past, and I'm not saying we're going to have the same kind of cycle like years past, but in years past, 1 year later, the lowest price it was up about 110% or something from that 200-week moving average. And so I'm not saying that's going to happen this time, but I would say with a pretty good amount of confidence that, once we get past this little bear market phase, which I think is nearing an end, if we haven't already hit a bottom, I think about 10, 12, 14, 16 months from now, the price is going to be doing much better than it is right now. So you can't go wrong buying a lot of Bitcoin at or near the 200-week moving average. And that's basically exactly where we are. I think today, at least on my trading view chart, where the 200-week moving average price is $63,997. And as we record this, the Bitcoin price is $63,086. So great time to be stacking sats.
Yeah, 100%. Before we get into the macro stuff, because there has been a lot of macro, I don't know, chaos, a lot of things to watch in the macro kind of space. You did mention kind of like the business cycle. So do you hold a lot of weight in the ISM PMI chart and that correlation with Bitcoin?
So yes, I am one of those people. And in fact, I talk about it like this 3-burner theory. And in fact, that has a lot to do with, at least the way I understand things, why the last bull market peak was so disappointing for so many Bitcoiners. And I'll try to run through it quickly. So I think of 3 things. So I think of the price of Bitcoin as like sitting on a stovetop in a huge cauldron. It's like a stew, right? And there's 3 burners underneath it. The first burner is liquidity, and basically everybody and their grandmother knows about Bitcoin and liquidity and their relationship, how they're really strongly correlated. I'll talk about caveats to that in a little bit. But let's move on. Burner number 2 is actually the business cycle, and more specifically, the US manufacturing business cycle, or the US manufacturing PMI, I think is the best thing to correlate with it. And you can see throughout the Bitcoin's short history a direct correlation with the movement of the US manufacturing PMI up or down, and the price of Bitcoin, the movement up or down. And then the third thing is leverage. And leverage kind of goes with the other 2. Those are when people are feeling bullish, when the animal spirits are just running hot, when everybody's talking about stupid proof of stake crypto nonsense garbage, and they're all going, levered long 50 to 1 or 100 to 1. Like, those are kind of end stage behaviors that lead to that exponential price move higher in Bitcoin. So let's back up. Why was 2025 disappointing? Why did we not have that hockey stick higher, that exponential move higher? We did have liquidity, and I want to caveat this real quick. So it used to be that global liquidity led Bitcoin because throughout the world, throughout the globe, when there was excess liquidity sloshing around the system, lots of people would put that into Bitcoin, not just in the West, not just in the US, but across the world. And China especially was a major player. As we all know, China has really clamped down on Bitcoin ownership and have very, I would say, strongly encouraged their citizens to think about gold ownership. And what's interesting is and Michael Howell has done a lot of work on this. I'm sure you're familiar with him. He's kind of the liquidity guy. Has shown there you can now see somewhere along the way it branched, and now Chinese liquidity or excess liquidity now basically goes into gold, and it has about, I want to say, a 6 to 9 week advanced Bitcoin gold lags the movement of Chinese liquidity by somewhere between like 6 and 9 weeks, and has nothing to do with Bitcoin really anymore. And US net liquidity continues to lead Bitcoin price. So that's nuance number one. Back in 2025, we were still having decent liquidity. It was still high and rising, but interestingly, we didn't have a manufacturing renaissance. In fact, if you go back and look at the charts, especially of US manufacturing PMI, it fell, it crashed in the bear market of 2022, like everything else crashed, and it never recovered. It stayed below 50. It stayed in this contractionary, recessionary phase all the way. It had a couple times where it popped up above 50 into expansion phase, but it, for the most part, stayed below, kind of in the mid to upper 40s, all the way through 2023, 2024, 2025. And that has never happened since the World War II, like since World War II, and since we've been tracking this data. Very unusual. And so for me, that's kind of the main thing. So that was burner number two, actually never turned on underneath the cauldron of the Bitcoin stew price. Okay, so we had liquidity. We didn't, but we were lacking Chinese participants for the most part. We didn't have US manufacturing taking off like it normally does, like it normally follows these kind of 4 to 5 year cycles. And then number three, because of that, we didn't have these animal spirits. So we didn't have people levering up, going long, going 100 to 1 leverage to try to jack the price up and to go all in on stupid proof of stake cryptos. That's why I think we had a disappointing bull market, the end to the bull market in 2025. It's also why I think we're having not that severe of a bear market. So even though the price has only come down about 50%, it's because we didn't have that huge hockey stick higher in price during the bull market. So the good news of that, or the silver lining to that cloud, is it means that there's basically less of that excess waste, and that excess leverage to basically get flushed out of the system during this bear market. So even though the price is disappointing while it kind of flops around in the 60s, it's kind of crab market right down here at the bottom of the lake. It bodes well for what's coming in the future. So I'm waiting for some signs that US net liquidity is going to start increasing again. And we're seeing little things make it pop a little bit, right? When we see what Besant did for Japan, those little kind of doses, I call them, they're like Operation Twist. They're not technically yield curve control, but it kind of is. It's sort of like indirect yield curve control, these things that are happening from a macro standpoint. And now we're seeing the manufacturing sector take off. Although, and then here's my final caveat, because this really throws a kind of a interesting twist to everything. There is a limited amount of capital or dollars, and there is a limited amount of energy or electricity in the world, and especially here in the US. Because of the direction of the Trump administration, they have pushed almost all of that into rebuilding the US industrial sector, right? It's going into data centers, AI. We have to win the AI race, is what you hear all the time. So they're funneling dollars and they're funneling electricity and energy preferences into that system, as well as into the military industrial complex, right? And into our just general infrastructure that's getting rebuilt as globalization dissipates and we kind of bring everything back to the United States to try to become a manufacturing powerhouse again. That takes a lot of money and it takes a lot of energy, and all of that is being directed into those sectors right now, which leaves very little for Bitcoin right now. So that has helped to propel the stock market higher in all things AI related and all things industrial and energy related, but it's left some things kind of on the sideline. And that's what I think is happening with Bitcoin right now. So at some point, something is going to change where there'll be a huge flood of liquidity. So what I think is going to happen, should we stop here, by the way?
No, I think I mean I have a bunch of questions, but I think just keep going. I think the chat's following along.
Okay. And I try not to watch the chat because it distracts me too much when I'm talking. I'm already too distractible. I'm like the squirrel. So there's a lot of talk right now about this whole AI investment being this kind of circular investment, and we're starting to see weird financial behaviors similar to 2007, 2008, and similar to 1999, 2000, where everyone is talking about these unbelievable revenues that are coming and these orders, like everybody has backlogs of orders that will be paid at some point. And so that's very, for equity investors, that's super encouraging. Like you want to see that. You want to see revenues just increasing and accelerating, going off the charts, and they are, and backlogs just going off the charts, and they are. But at some point, if somebody along this circle can't pay, so like I'm talking about NVIDIA and all of the semiconductor companies, and then all of the hyperscalers that are involved, that they've already burned through all of their free cash flow. And then they've issued, that's step number one. And then step number two is they've issued tons of equity to raise more cash. They've already done all that. Then step three is they've gone to the bond markets and they're taking out hundreds of billions of dollars in loans to the public markets. Step four is now they're getting the sort of the dark markets, the KKRs, the Blackstones, these other institutions that are backstopping their loans now at this point. And this is the kind of stuff you see. And now we're starting to see these loans get put into tranches, similar to what we saw back during 2007, 2008 with this whole mortgage, these mortgage-backed securities, right? And these credit default swaps, these CDOs, these kind of things. This stuff is starting to happen now in the AI sector for the data AI infrastructure build out. The first tranche just got evaluated and was given a AAA rating by, I think, Moody's, which is just exactly the same as what happened back in 2006, 2007, 2008, and we all know how that ended. So at some point, this whole circular financing rush for capital that's happening right now in the AI data center build out, chaos, at some point it's going to run out. So we've seen these unbelievable equity gains so far. Has it already peaked? I don't know. What will happen when the capital runs out and we have the last buyer? It's not going to be good, but things are going to come down. And I think that this whole sector and the backing of the Trump administration has made it too big to fail. So at some point, stuff is going to start to crumble and it's going to start to look really ugly. And I think it's going to happen pretty quickly this time, like faster than it did back in 2007, 2008. And I think the government is going to be forced to step in and backstop it. And by backstopping, that means, so we all know the phrase, right? These companies, they privatize the gains and they socialize the losses. So when things are good for the semiconductors and all the hyperscalers and everybody involved in here, you're like all the CoreWeaves, right, and Oracles, and just pick your company. They make massive gains, huge equity gains. Their market caps are just going in the multi-trillions now. When this collapses, it's going to be considered a national disaster and an emergency, and it's going to be a threat to the overall monetary and financial system. So the government will be forced to step in and flood it with cash to save it. And what that means, it's going to debase all Americans and all users of the US dollar to help save it. So they're going to socialize the losses. So they're basically going to be backstopped by the US government, just the way the banks and all the housing industry was backstopped by the government back in 2008, 2009. And all of the regular people paid, right? People lost houses, they got destroyed, they went bankrupt. They didn't get anything out of it, but the bankers got saved. The huge institutions got saved. Everybody who had connections to Washington, D.C. was saved, but the regular people gets hosed. That's how you socialize the losses. And I think we're setting up exactly the same way this time. And I don't know when it's going to happen, when the bubble will pop, but it will pop at some point, and that's going to be a bad day.
Yeah, no, I've been following along pretty closely as like exactly what you said, and part of me is like I can't tell if I'm just being kind of bearish on AI, and then the whole like cold card thing happened. I was like, okay, maybe I underestimated AI, but like there's still a bubble in AI, and just going through the sequence of events, just to like add another little cherry on top, like Michael Burry, what didn't he come out yesterday? It was like, hey, the AI hype bubble, this is gonna burst, and you're just like, wow, okay, we are reliving 07, 08 all over again. Though that leads to, and of course, you basically just said it. We don't know when it's going to pop, but I have been seeing a lot of people essentially say, things have changed now and they can run it a lot hotter than we can even expect. So what's your thoughts on that idea? Like, we know it will come down, but is this time, I'm not going to say it's different, but are the macro kind of governmental levers right now, like how much harder can they run it, I guess is the question. Because I did see you tweet about the death spiral is accelerating, but it's almost like all the old numbers and old metrics don't even matter anymore, just because they're like, we're going to run this until the wheels fall off.
And I think that's what happens. And people hate this answer, but it's true in finance that it's going to work until it doesn't work. Until the day it doesn't work, there's going to be a Minsky moment, right? That's like something like what snowflake is the one that causes the avalanche, right? And that's something will happen at some point where the market will finally be like, okay, that's it. And the big players will suddenly rush out, and then it'll start this avalanche down. So when is the question everybody wants to know, and it's a fool's errand to think about these kind of things or to make predictions, right? I get predictions wrong all the time. I'm sure people in the audience are flaying me for getting predictions wrong in the past, and so I do, right?
Hey, me too.
I was wrong, everybody. I was wrong. It did not hit 475K in 2025. So don't listen to anything I say. So especially about the future, because I'm just guessing.
Well, wait, Jeff, it's more of the framework. Like, I think that not necessarily the prediction of when, it's just like, how should people be viewing this? Because, when you talk about this stuff, everyone does just going in the bond market. It's like, oh, if the US, government bond yields go above 5%, like it's all going to explode. And, there's a bunch of metrics that people throw around. But when you're looking at it, you're like, wait, I think they can just those numbers don't matter anymore is basically what the vibe I'm getting.
Yeah, I will say that in 2022, basically, we turned into an emerging market from a financial standpoint here. And when I say we, I mean the United States. And what do I mean by that? When now, unlike in the past, so from 1980 to about 2021, anytime the stock market would crash, people would sell their stocks and rush into bonds. So bond yields would go lower because bond prices would go higher because people were buying bonds, right? So they would flee to safety into the US dollar, into US long-term bonds, and out of risk assets. And then when it was safe, they would sell some of their bonds and go back into stocks. That's why this whole 60-40 stock bond portfolio was just brilliant for about 40 years or so in the US. Those days are over. The bond market bottomed, and several of us were talking about that and saw that coming back in like 2020, 2021, that, when we reached negative interest rates in some countries, in Japan and especially, but multiple countries. That's unsustainable. That's crazy. That was clearly like the peak of the bond huge bull market that they had for about 40 years. We live in a different world now. We live in a world now, and especially here in the US, because of the amount of debt we have, that when things hit the fan, people sell stocks, and then they also sell US Treasuries. So you see stocks go down, and instead of going to the safe haven of bonds, bonds actually get sold off as well, and yields actually go higher. And people also sell the dollar now. When you see that triple combination of stocks down, treasuries down, meaning or yields up, and dollar down, you just absolutely live in like a third world country at that point. And that's what we're going to right now. And that's, to be honest, and it's unfortunate, but most of the Western world has been following our lead, or is leading us, like Japan is ahead of us with how much debt they have, although they have a lot of assets too. So that's why I think that it's not as panicked. The situation isn't as terrible over there, but it's not good. And so when these kind of things happen, the old safe haven asset of the U.S. Treasury, that no longer holds. And so what you have to do and what you have to think about is what serves as a safe haven asset, if not the U.S. Treasury and if not the dollar. And I think most people on your channel would know, right, how I feel about that too. Bitcoin, sound money, hard assets in general do really well in these time periods. So when people start to have doubts about the US dollar, when they think maybe the US and Western countries are over financialized, maybe they have too many derivatives for their limited stock of underlying assets, maybe they've pushed it too far for too long, they start to look for alternatives. And those are the time periods. And I have charts that show, and the best chart to look at these things, I think, and I've posted this many times, but it's like a 120-year chart of the S&P 500 divided by gold. And you see these huge peaks of financialization followed by these like 10-year drawdowns, where we, so, and the times that they happened were back in 1929 was a peak, 1968 was a peak, and then 1999, 2000 was a peak, and we had our most recent peak in late 2021. And basically what happens is the world can't take the financialization anymore, and they start to leave US stocks and start to move into hard money, sound assets, right? Sound money, hard assets, those kind of things. So gold is an easy one. Other commodities tend to do really well. Real estate, those kind of things. This is the first cycle like this where we've had Bitcoin. So I'm optimistic that as the hardest money and the soundest money, that Bitcoin will do quite well, but it remains to be seen. So that's the kind of the macro, that's the secular, the overarching macro view that I see, is that the US is basically an emerging market as far as its finances go. Treasuries are no longer the world's safe haven asset, or even the dollar as much, even though the dollar is better than basically every other government fiat currency. And people will continue to flee little by little, but more so during the acute events, the acute drawdowns. They will flee into Bitcoin, into gold, and into other hard assets.
Got it. Okay, that makes perfect sense to me. Just to be clear here, the chat, we got Fiat Smack, I think sums it up. It's official, the dollar is dead. Are claims of the dollar dying overstated?
Yes. The dollar is, for all of its faults, and I have a lot of criticisms of the dollar, right? You guys who know me know that I do, and of the central bankers and of the Fed and all this and all of our policies. But the dollar is still the best fiat currency of all of the fiat currencies. And so about 160 other fiat currencies have to die first before much happens to the dollar. I think the dollar will actually strengthen from a relative perspective, relative to other fiat currencies, which are going to do way worse much sooner than the US dollar.
Yeah, I'd agree with that. I mean, it obviously, as a Bitcoiner, you definitely get caught up in the purchasing power of the dollar from 1913. It's 99% lost its purchasing power, and you do get caught up in the dollar's dying, and then you kind of look like in a vacuum, you can make that case, but when you look at the macro, it's exactly what you said. It's the dollar's trash, but it's not going to go away for a while. I really like how Nolan, Count BTC. Nolan, I always mess up his last name, Bauerler. He's like, we are in a bimetal phase right now where it's the dollar and Bitcoin. And I think that's the best framing, because everyone gets caught into this idea. It's like the dollar's dead. You get in this doom, like it's going to die tomorrow. And you're like, no, that's definitely not what's going on right now if you're following the macro landscape here. But anyways, unless you want to go on that, I do want to go into the yen stuff that we saw, because I've been trying to make the case for the show. If I don't talk about Bitcoin, they really don't care. So I have to I gotta massage the story so that they understand how important this is. So could you talk about, they know, if they watch the show, they know the importance, or rather the place that the yen, has in the global kind of macro, venture capital perspective of this. But could you hint on, or rather explain to the audience, the significance of what Scott Bessent did with the yen? What was it, 2 weeks ago? I think it was 2 weeks ago.
Yeah, a week or two, somewhere in there. Everything has happened in the last 2 weeks. So
it's been crazy.
Keep track of everything. But there are different explanations for why this happened, right? So I think everybody knows that the yen has been getting weaker and weaker relative to the dollar. And so there are lots of explanations for why, and for why Bessent did what he did. One of the reasons why is because Japan has basically no energy source, right? They shut down the majority of their nuclear power plants. They have to import almost all of their energy. With the Persian Gulf situation going on, and with significantly increased oil prices in the world, around the world, that puts a huge burden on countries that have to import their oil for their energy, one of which is Japan, who is a major ally of the United States, obviously, right? So that has put a lot of pressure on their currency because it gets more and more expensive to buy oil priced in dollars. Excuse me. So their currency has been getting weaker and weaker. That's one thing that's been going on. Also, there's lots of other reasons. They're way massively over indebted, even worse than the U.S. If we talk about, I think they're closer to 250% debt to GDP, although they do have a lot of assets around the world, including they have lots of treasuries, which brings us back to what Besant did, right?
Yep.
So if they want to defend their currency, what they can do is sell assets, usually in dollars, and they have lots of dollar-based assets, and then take those dollars and buy yen with those. So that should drive down the dollar and drive up the yen, relatively speaking, strengthen the yen and weaken the dollar. If they do that, though, there's a problem, right? Because the U.S., we already are struggling with very high bond yields on the long end of the spectrum. So from the 10 years currently at 4.65, the 30 years sitting at 5.21%. When you have so much debt like we do and Japan does, any bump higher in these rates means that our debt payments increase as well, and they can kind of snowball on each other, and it can be a debt spiral or a death spiral. So in an act of kindness, as Besant would say, like what we're doing for our allies, they took part of what the Treasury had. They had some euro sitting kind of on their balance sheet, sort of as a reserve currency, a reserve asset. And they're like, hey, you know what? We're going to take this euro that we have and we're going to sell that and buy Japanese yen with that. And then they publicize it, right? So they do a lot of job owning. And the act of saying, hey, we're going to support our friends, the Japanese, we're going to support their currency. He showed a little picture of a note that said buy $5 to $10 billion of yen and posted that. Like, I mean, what a crazy time to be alive, right? Who does that? So he did that, and he's a former hedge fund manager who made a lot of money shorting, the pound, and that's a whole different story back in the '90s with George Soros. So he knows what he's doing in terms of currencies, he has a lot of experience in this area. So what they didn't want to do is have Japan sell their treasuries, because Japan is the #1 holder of US Treasuries. I want to say they have about $1.18 trillion worth of US Treasuries in their reserves. And so instead of selling those and possibly raising the interest rates for the US Treasuries on the long end, instead, Besant basically extended a short-term loan and said, you give us some collateral, we'll give you some cash. You can use those dollars to buy yen with, and then you can pay us back at a later date. And so there are literally like probably 10 different interpretations of what that means. I tend to think that this is basically a form of like indirect yield curve control, right? Mm-hmm. He's saying, I don't want you to sell our treasuries because we don't want our rates to go any higher. Why don't you take this little short-term loan because you're our friend, wink, wink, and we'll keep all of our rates lower, and that'll be good for all of us. And then you, Japan, can keep investing here in the United States and keep your investments so that we can continue to build out our infrastructure, and the military industrial complex upon which you rely so heavily will keep this whole charade going. So that's why I think he did what he did. I think we haven't seen the end of it. I do think, by the way, that Japan's prime minister talked about they are okay with raising their interest rates even more. So that's going to affect that whole yen carry trade. Excuse me for a second. It's going to affect the carry trade, basically, where people, hedge funds and other institutions, were borrowing yen at these lower interest rates, basically, and then using that money to shorting the yen and buying other assets, basically. As Japan's interest rates go higher and as the currency starts to strengthen more, that carry trade is going to necessarily have to unwind. That's really interesting because lots of people have been using that sort of yen carry trade. Most people have heard of that by now, to help drive asset prices higher over the last, basically the last decade plus. Much of those gains were seen in the U.S. The U.S. tech sector has been the primary beneficiary of that. So if that starts to unwind, that'll be interesting to see how our equity markets handle that. That's a really long answer, but
yeah, no. I mean, it's great. It's someone in the chat said Jeff is a Bitcoiner's dream dinner guest. It's like, I think you summed it up great with it. It's the most interesting time to be alive, and I think if we weren't all Bitcoiners, we would all probably be panicking because there's so many things that are happening at the same time that it does get like enormously scary with everything and the implications. You're like, oh my god, like it's all going to blow up tomorrow. Like I see why it's so easy for doomers to become doomers, because you look at this and the magnitude of these problems and you're like, okay, yeah, like this is really bad and there's no way out of this. And us Bitcoiners are kind of just like, yeah, but Bitcoin's down 50%. Like this sucks. You're like, wait, but like everything's going to blow up. Obviously not overnight, but yeah, in the like macros, I think the most interesting thing to me right now, just all these factors playing out and the wars, and you're just like, it's insane out there. I do want to talk, and we'll wrap up after this one. I do want to talk about the idea of the big print. Obviously, you kind of made the case for that. It's kind of happening. They're doing it kind of slightly. You know, they're doing it like where it's basically, you know, quantitative easing without quantitative easing, you know, headlines. I'm sure you saw, actually, I saw you tweet it. There was that interesting comment from Trump saying that they're going to eliminate capital gains, but like inflation based. You could read that in a way of them saying like, yeah, we're going to print a shitload of money. So, you know, as a Bitcoiner, we've all heard like Larry Lepard, the big print. We've heard, you know, Lynn Alden, can't stop this train. So where is your view with the big print? Like, is it still coming down the pipeline? Are they currently doing the big print? Are they trying to do the big print without the big print headline? Like, what's your take on the whole meme of the big print and it's coming and it's going to happen?
So first of all, I'm friends with those guys. I have breakfast with Larry probably once a year. He's a great guy. I like Larry a lot.
Yeah.
I think so. The big print isn't here yet, and I think he would agree that it's not here yet. We'll know it when we see it, basically. So like when you have a calamity in the financial markets, and the last one we had was basically during COVID, which then resulted in this just unbelievable fiscal and monetary response back in 2020 and 2021. Before that, the huge, you'll know it when you see it, was the financial crisis, 2008, 2009. You'll know it when you see it. Like everybody will be panicking, and whatever precipitates the event, and I think it's going to be the unwind of the AI trade, basically. Something's going to give, and it's going to be like an Enron type moment where somebody's going to be like, I can't make these payments, or some IPO will go wrong. Something will happen at some point, and the system will start to crumble, and then you'll start to see these jolts lower, and people will start having real fear. I want to be clear, if this happens, it will affect Bitcoin, and it's going to affect Bitcoin to the downside. So Bitcoin, because it's the world's most liquid asset, it's available 24/7, 365. It will get sold because of margin calls, because when stuff happens quickly, people get margin called, and when they get margin called, they don't get to pick and choose which asset they want to sell. Excuse me. They can't be like, oh, I want to sell that chump condo I have in, you know, Tampa Bay. So let's hold off for a little bit, and I'll get some liquidity once this sells. It's like, no, when you get margin call, it's like you got like a second to bring, or maybe a day, maybe 24 hours, sometimes only like an hour, sometimes less than that. And so whatever is liquid will get sold for this margin call. That includes Bitcoin. So what happened, I think, during 2020, I think it was March of 2020 when COVID first happened and we had that huge drawdown. I was positioned in my fund with, you know, hang on a second, I gotta get a drink here.
No worries.
I actually saw that coming with my macro stuff that I watch. I'm like, things are gonna get bad here and it's gonna happen quickly. So what I did is I actually loaded up in a lot of gold, because I'm like, well, gold is like a great asset to own, and some Bitcoin. So I had these two things as sort of this safe haven go-to. They just both got smoked. Stocks crashed, bonds got hammered, everybody just went to cash. They actually sold all their gold. Gold got hammered down. Bitcoin dropped 50% from like 6,000 to about 3,000 in that range. It was unbelievable. And then they started to recover and started to go well. And I think that's a good example of what I think will probably happen this time around too, if it does and when it does. That even safe haven assets like sound money will get hit hard and they'll go down, but they'll be the first to recover, because people will be like, what the heck, why would I want to sell, this, and why would I want to own treasuries right now? And why would I want, they're bailing out the AI sector. This is insane. They're going to just debase all of us. So people will then flock back into sound money, and Bitcoin will be the first to respond, and gold, I think, will do well too. And sorry to talk about gold, but I came to Bitcoin through gold. So I always see things also through a gold lens, but, that's what I think is most likely to happen. Again, I don't know the timing of when it's going to happen, but I think it's illustrative for people to go back and look and see what happened back in 2020 during that it was kind of like a flash crash, but it was painful, and there was a ton of fear, and there were an amazing amount of margin calls and leverage long liquidation cascades during that time period. And when things move, they can move really fast. And so if you see that coming, I think the wisest thing to do, if you want to just chill, most people who are just DCAing and chill, that's like totally the way to go. That's what I recommend for 99% of the people. And for the other 1%, maybe build up a cash position leading into that. If you see like signs like something is coming, and be ready to buy stuff at fire sale prices and stink bid prices. And then that's coming full circle. That is when the big print is coming. So when things get crazy, and when we start talking about this is a national imperative that we have to save AI, we have to save, pick your company, Anthropic and OpenAI, or we're going to lose to China. So therefore, we have to print, several $1 trillion quickly and put them into and flood the system with this easing. That's when it's going to happen. And we're also going to see this yield curve control. People are going to be talking about that because we're back into a treasury bond bear market where the yields just continue to go higher and higher. And in the past, these bear markets have lasted like 40 years. So I think we're probably going to be dealing with higher and higher interest rates, probably until like 2050, 2060, 2070, wow. Somewhere in there. I'll probably be dead by then. You guys will still be crushing it with your Bitcoin, and I'll be somewhere else. But so it's just a different world at that point. And so, anyways. It
was great. It's great. I think you're giving the audience a lot of alpha here. I do want to just add, I think part of what we're seeing right now is a lot of people still have that mental paradigm of the world is how it was in 2010. And I think maybe only some of us in Bitcoin and maybe more niche down, not just Bitcoiners, but like yourself and Larry and Lynn Alden that are more in tune with the macro and, the AI and Bitcoin all involved in it, that most of the macro conversations that I'm hearing is like exactly what you just said. It's like, guys, we're in a new world right now. What we knew worked in the past doesn't work now. And so everyone is trying to, for lack of a better word, just like iterate and adjust their mental macro picture because everything is so different right now. And what we know worked, it's just like, it's either it doesn't work and everything's broken, or just like adjust to kind of a new phase of where we are. And so I'm glad you keep kind of hitting on that same idea. It's like, no, like we're in a new era. And I've been saying that to everyone on the show about Bitcoin. It's like, look, I know 4-year cycle, things are kind of working out how we're used to, but this is a whole new era, not just in Bitcoin, but in the macro landscape. And I think a lot of us haven't really calculated that into where we're going from here. And so I'm glad you kept hitting on that, because I keep saying it to everyone. They're like, yeah, okay, Opti, like, you don't know anything. I'm like, no, guys, like, I swear things are different now. They're like, oh, here we go. Opti saying this time's different. And I'm like, look, I know it's playing out normal, but like the underlying foundation is fundamentally different. Anyway, this last question's for me, and then I'll let you run out. What are you watching? Like, as someone that is very in tune with the macro, and I would consider myself a novice now, but to me, it's the most interesting kind of phenomenon happening. I think it's the best value I can add to the show is being more aware of what's going on in the macro and trying to explain it as easily as possible. So, what are you watching? Like, what? When you wake up in the morning, what are the things that you watch? And, maybe it's charts, maybe it's certain currency exchange rates. Like, what are you watching in the morning? And again, this one's for me. I'm like, okay, what do I need to keep an eye on? Because I remember I had Larry, or no, it wasn't here. It was Larry at Mining Disrupt last year. He did his speech. And there was one moment he's like, yeah, when I wake up, he's like, I watch the Bitcoin price, the gold price, the Japanese bond yields, the US bond yields, the Dixie. And I think he might have said like USD, Japanese yen rates. And I was like, okay, like Thank you. Thank you so much, Larry. So every time I wake up, I'm literally like, oh, it was equities. So every morning before the show, it's like Bitcoin price, gold price, S&P 500, QQQ, Dow Jones, Dixie, and then the various different government bond yields. So like every morning I'm like, okay, where are we compared to not just Bitcoin, but in the macro? So anyways, what do you watch? What do you recommend for the budding macro economists out there watching this right now?
Yeah, so I'm glad you said that at the end, because I would say most people shouldn't watch any of this. Because it's just nonsense, right? Like it's fun to talk about, but like what most people should be doing is just stacking sats and going on with their lives. Agreed. Right? So you shouldn't be listening to any of this, and you shouldn't be worried about anything. Excuse me, I'm sorry. But what do I do? So for the macro nerds and the budding analysts out there, I actually have my trading view set up, and I can just go right through, and I'll tell you what I do. So I get up and I pop my computer on, and I look at the first thing at the top for me is what are short-term T-bills doing, what's the 2-year bond yield, and what's the long 10 and 30-year yields, like what are those at, and where are they moving? Is it a normal curve? Is it inverted? Like what's it doing? And then I look at US net liquidity, and I look at the move index. So what is bond volatility doing? I also I have Brent and US oil prices up there as well, because oil front runs CPI basically and PPI. So you can just tell what CPI is going to do each month based on what oil just did. And if a surprising amount of people still don't understand that, which I don't really get why, but that's like one of the easiest cheat sheets in finance. I look at VIX too. So like what is the volatility of equities doing? And then I look at the Dixie also. So what's the dollar doing in general? Because if and most of the time it doesn't matter, but if it's strongly accelerating, if the dollar is getting relatively stronger, the whole concept of the dollar wrecking ball starts taking effect, and that ruins everything. That's basically the time where you don't want to be in risk assets, and Bitcoin tends to get hit pretty hard when that happens in the short term. And then I look at kind of what the S&P 500 and NASDAQ are doing, Bitcoin price as well, and then I have gold and silver. And so I go through all of those things, and I always have. So if you ever see me doing this, where I'm looking over here, that's what I'm looking at. I'm looking to see what one of those things are doing. And that kind of gives me my overall macro picture in a nutshell. And so, if people want to do that, like if you can kind of understand how those things all interplay with each other, you can kind of front run asset prices and what things are going to do, like if oil is going up, you can be like, that probably means that treasury yields are going to be going up, and if yields are going up, that means, and the yield curve continues to steepen, that's actually usually good for financials. So maybe banks will do pretty well going forward for a while. And you can kind of go through this whole series of exercises about which asset classes will do well and which might be struggling in the near term.
Think about what passes through your family group chats in just a normal week. If you have kids, your school pickups, your vacation plans, photos of your friends and family, medical updates, home addresses, financial decisions. And you may trust the people that are in those group chats, but do we really trust the companies that are operating those apps? And that's why Key gives families better options. It's a free messaging and video calling app built peer-to-peer with end-to-end encryption and no centralized company database holding all of your conversation. So Keat doesn't track your metadata, and nobody needs to provide a phone number or an email to join. Create your group, share files and photos, make audio and video calls. Again, all end-to-end encrypted and peer-to-peer, all without turning your home life into another corporate data profile. So guys, go to keet.io/simply Bitcoin. That's Keet, KEET.io/simply Bitcoin. Download it. It's free. Invite one person you trust and start a conversation that belongs to you guys. Scan the QR code down here. Go try it out.